The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Hope you're having a great Tuesday out there. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. 877-927-6648. That's the number to use if you want to give me a call, talk about this market. You can catch my show daily on TFNN from 3 to 4 Eastern. Also available as a podcast on iTunes. If can't listen live, head over to iTunes and get the podcast. And don't forget, you can listen to all TFNN programming on your smartphone. All you have to do is open your smartphone browser, type in tfnn.mobi. Very simple. Very simple. Just click listen once you go to that URL, and it'll start streaming instantaneously. And don't forget about Tiger TV, another neat feature at tfnn.com. Channel 1, the show is carried live. It is archived on Channel 13 with Tiger TV. Not only do you get the show audio, but because it's TV, you can also look at charts live right along with me. All right, we've got news late in Tuesday's session that the Parliament in Cyprus rejected a controversial plan to impose a tax on bank deposits in the area. That's according to media reports. Stocks are a little bit off their lows, but not by much. In fact, it looks like we could see another distribution day, higher volume decline for at least the NASDAQ Composite and S&P 500 today. We'll have to see how that plays out as we wind down into the close here. But taking a look at the NASDAQ Composite, we'll see the tech index trading just off its lows, down 21 points, a little more than 21 points, about 0.7% to 3216. It is still holding above the 20-day moving average here. Not by much. Its 50-day moving average is at 3170. So that's a look at the NASDAQ Composite. Let's take a look at the SPX here, S&P 500. We'll see that it, too, is trading near its session low, down close to 9 points to 1543, still holding just above its 20-day moving average. And then the Dow Jones Industrial Average, it is hanging around at its 10-day moving average. It still has a ways to go to get down to the 20-day moving average. That's at 14,220. Dow trading right now at 14,422. Down only about 0.2% on the day. Volume on the New York Stock Exchange and NASDAQ tracking higher than Monday. So headed into today, again, 2 higher volume declines for the S&P 500, 2 for the NASDAQ. Unless things change dramatically between now and the close, which could be the case, we would have 3 higher volume declines for the NASDAQ and the S&P 500. So what does that mean? Distribution, institutional selling starting to make its presence felt in the market here. So not a bad idea to tread cautiously. All right, so if you subscribe to my newsletter, Ultimate Growth Stocks, you received the weekly update earlier today, and news right at the beginning is that I have decided to end Ultimate Growth Stocks. That is going to be, today was my second to last issue. The last issue I publish will be next Tuesday. Let's see, Tuesday, today is the 19th, so it'll be Tuesday, March 26th. My last broadcast on TFNN will be 1 week from this Thursday. So the show is going to continue for the rest of this week, and then we're going to go Monday, Tuesday, Wednesday, Thursday next week, and my last show will be Thursday, March 28th. I do have a heavy heart about ending the newsletter. The team at TFNN, Tom O'Brien and his great staff have been great to me, real pros. But it is time to move on. I just decided to accept an offer to go back to, where I ended up learning the market. Opportunity came up for me at Investors Business Daily. I'm going to be going back to the company where I got my start. I'm going to be writing for the markets team there, and hopefully be involved in some other projects as well. But we'll be contributing heavily to the markets coverage at Investors Business Daily. And that is basically where I am at. Ultimate Growth Stocks got its start in November 2009 when I was with The Street. And then I moved the newsletter over to TFNN. I think it was in April 2011. So it's been going with TFNN for a while, and I've thoroughly enjoyed doing the radio show as well. And it's just time for a change, and so that is where we are at. So again, my newsletter, the final edition of Ultimate Growth Stocks will be Tuesday, March 26th, 1 week from today, and my last radio show will be Thursday, March 28th. I believe Friday, March 29th is a Good Friday, and the market will be closed then. So that is that, and anyway, we will carry on and continue to talk about the market between now and March 28th. So that is that. Taking a look at April, gold extends its winning streak to 4 sessions today, rising $6.70. 0.4%, settles at $1,611.30 an ounce. U.S. dollar up again, close to 0.4%, last trading at 82.99, and bond yields lower again. 10-year note down to 1.91%, 30-year bond 3.14%. April crude oil 92.16 a barrel, down $1.58. 1.7% decline for black gold. Kind of a hairy move in the USO today. This is the United States Oil Fund, which basically tracks the spot price of West Texas Intermediate light sweet crude oil. See, it hits a high of 33.73, but a spectacular reversal in heavy volume. So pretty bearish price action here with the USO today, last trading down 57 cents, 1.7% to 33.08, back below its 200-day moving average after a brief stint above the line. Drillers, exploration, and production firms under pressure today. Let's take a look at ENSCO ESV. We'll see, this is a driller, has been under quite a bit of pressure since late February. Big break below the 50-day moving average. It is down another 2.6% today to 57.17. Definitely, signs of institutional selling in this driller since February. So be careful here. Support looks pretty strong at that 56 level, but under a lot of selling pressure. Another driller, Transocean, RIG, starting to live underneath its 50-day moving average as well. Not the best of signs. It is down 94 cents today to 52.33. And Noble Corporation, NE, and we'll see that it too below its 50-day moving average for several weeks now, and sitting just above its 200-day moving average, down 2.4% today to 36.36. Exploration and production firms also under pressure today. Continental Resources has been a very strong performer in the market. It is taking a hit today, down 2.2% to 88.83, and BCEI, this has been one of the best performing oil and gas producers. Very strong earnings last week from Bonanza Creek, and definitely extended coming into today. Looks like it's finally ready to consolidate here. Stock taking a hit today. Looks like volume is going to come in higher than Monday, down 6.5% to 38.82. Take a look at some other movers today. How about ARM Holdings, ARMH? This is a stock that could do no wrong for a long period of time. It is underneath its 50-day moving average finally. You'd have to go back a long way to find the last time ARM was underneath its 50-day moving average, but you can see the reversal on Friday where it hit a high just over 43 and then reversed, closed near its low, and then down Monday and down again today. The news here, probably a bit of an overreaction. Their CEO, Warren East, who's been with the company for quite some time. I think he's been in the CEO post for 12 years, has been with the company for 19 years. He's stepping down July 1st. The succession plan will see current president Simon Sagers. He's going to take over the CEO post, but stock under a little bit of pressure today, down 2% to 40.63 on the news. ARM Holdings, one of the leaders, a UK-based chip designer who's they basically design chips for the smartphone and tablet market. So they are kind of right in the sweet spot of that area of the market. So ARM Holdings under some pressure on news of a new CEO down the line. Also in tech land today, JMP Securities came out with a comprehensive note about the internet sector. Had some positive things to say about eBay. eBay, of course, has been under a lot of pressure in recent weeks. Really ugly price action too. Definitely big sellers in the stock for the past couple of weeks. eBay hits a high today of 53.63. It has reversed and is all the way down near its session low, last trading at 50.99. Still up 1.8% on the day, but this just looks like a weak stock all of a sudden. The analyst at JMP Securities basically started eBay with a market outperform rating and a $67 price target, so it's about 16 points below that price target. Ugly price action in the stock today. JMP also started Google, AOL, Priceline, and Zillow, all at market outperform as well, which is basically the equivalent of a buy rating. Let's take a look at shares of Priceline, see how it is responding. That is PCLN. There it is. We'll see Priceline down 1.5% today to $686.24. Breaks below its 50-day moving average. So you can see a lot of these growth stocks definitely under some have been under some pressure for a little while. We've been talking about the weakness in eBay. A name like Equinix, EQIX, under a lot of pressure. This is the company that operates these data centers. Break below its 50-day moving average last week. So positive comments by JMP Securities about a lot of internet stocks really not doing much to help the group. They also put a market outperform rating on Zillow, and we'll see shares of Zillow very extended up here, but Zillow hits a high of 56.73, now near its session low 53.36, down 2.5% on the day. So positive comments by JMP Securities not helping some of these stocks. JMP also had started Amazon, Facebook, and Yahoo with neutral ratings. All right, folks, headed into break number one. Stick with me. Coming right back. Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. Pretty quiet week of IPO activity, and wouldn't be surprised with the market acting the way it is and distribution starting to make its presence felt. Some of these companies planning on coming public may shelve their plans for the time being, but for now we are expecting an IPO from Marin Software. That's going to trade under the ticker MRIN. They provide a cloud-based digital ad management platform. Small company. They plan to offer 7 million shares at a price range of 11 to 13. If it prices at 12, that's going to give it a market cap of around 400 million. Goldman Sachs and Deutsche Bank are the underwriters on this deal. Marin Software, MRIN. Also, Pinnacle Foods, packaged foods company backed by Blackstone. They're right now going to price 29 million shares at a price range of 18 to 20. And then also this week, Model N as in Nancy, ticker MODN. They provide revenue management software to the life science and technology sectors. Another small offering here. They're going to price between $12.50 and $14.50. At the midpoint, the company would have a market cap of around 331 million. JP Morgan and Deutsche Bank Bank are underwriting this deal. So also West Corporation, WSTC. This is a company I believe at one point was public. It was taken private. Now it's going public again. They provide conferencing and call center services. That is going to trade under the ticker symbol WSTC. Bigger company here, should come public with a market cap of at least $2 billion. They're going to offer 21.3 million shares at a price range of 22 to 25. So that is the deal. There are some IPOs set to price this week. Other news today, let's take a look at shares of Liberty Media, LMCA. There's Liberty Media. The stock is down 4 cents today to 110.62. Company said it's going to purchase a 27% stake in cable operator Charter Communications. That's a CHTR. For just over $2.6 billion, or $95.50 per Charter share. So Charter having a good day. Big move for the stock yesterday. It's extending gains today, up 2.2% to $100.18. How about Lululemon? LULU. We had Lulu in the letter this morning as a possible short candidate. Stock has been acting weak for quite some time. Basically, it's been acting weak since late last year. Stock is down 2.6% today to 64.19. It is all the way at its high. That 64.19 is its high for the session after hitting a low of 62. More supply chain problems at Lulu. They are going to have to pull their black yoga pants off the shelves. The company said they are too sheer, basically too revealing, and that the top-selling pants are going to be in short supply going forward. The lack of these black yoga pants is going to hurt revenue. Lulu reports earnings on Thursday. Company now said first quarter revenue is going to be between $333 and $343 million. That's a little bit below the estimate of $352. It also lowered its first quarter same-store sales outlook to 5% to 8% growth from an earlier estimate of 11%. So Lulu, just a tough stock here. Under distribution, to its credit, it has bounced nicely off its lows. Perhaps some analysts coming to the company's defense, but we take a look at a weekly chart here. I think we looked at Lulu yesterday and talked about its weak technical picture. 65 was the kind of the line in the stand here. That's this blue line is basically connecting its recent lows. So it did break below that 65 level, which to me probably brings a trip down to this 52 over time into play. So Lulu still looking quite weak here. Ryanair, this is a discount airline over in Ireland, and news here, big gap up for the stock today. Not extended in price, up 2.7% to 41.43. News here is that they're going to order 175 next-generation 737s from Boeing. List price of $15.6 billion, but they're probably not going to have to pay that much. You buy in bulk like this, you usually get a little bit of a discount. So Ryanair, one of many airline stocks performing very, very well, looking very strong here, up 2.7% to 41.43. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former chief technical analyst of the Tiger Trading Post at TFNN and is a true market innovator who has taught thousands of students how to read charts and be more successful traders. Don't miss this chance to learn from a TFNN legend and get this timely market advice that will put you on the right side of the market for the next major move. Plus, he'll show you his expert analysis on the current major markets and explain the technical setup that is predicting a move of over 50%. We're offering this one-of-a-kind special package for only $179, and the moment that you sign up, you'll gain access to Bud's 11-page executive summary where he provides you with the keys to his market call and prepares you for his live 90-minute webinar on March 21st. Don't miss this one-of-a-kind offer. Sign up today on the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, friends, to Breakout Investing on TFNN. Ken Shreve with you. Let's see here. Let's check in on the markets. Why don't we, as we head into the close here? Close to 25 minutes left to go in Tuesday's session. Selling pressure fairly muted in the Dow, down 21 points. That's all, to 14,431. NASDAQ and S&P 500 underperforming today. NASDAQ down close to 18 points to 3220. S&P 500 down about a little more than 7 points, 0.5% to 1545. Volume on the New York Stock Exchange and NASDAQ is tracking higher than Monday. That means if things stay the way they are now, we could see another distribution day added to the count here, and that would make 3 for the Nasdaq Composite, 3 for the S&P 500. When higher volume declines, when you start to get into that five higher volume declines in recent weeks, 5 or 6, that is normally a pretty good indication that the market's gonna still has more downside ahead of it. But right now, NASDAQ volume tracking about 10% higher than Monday. Volume on the NYSE tracking about 15 to 20% higher. So unless we get a big rally into the close, hey, these dip buyers have been around in the past. They could be around again today. We'll see how the session shakes out. Taking a look at some earnings reports today. Start with Walgreens here, WAG. Big move for this stock today, up 5% on the day to 44.55. Earnings up 9% from a year ago to 96 cents a share. That was 2 cents better than the consensus estimate. Sales were flat at $18.65 billion, mostly in line, just a hair below the consensus estimate. The company also expanded a supply agreement with drug maker AmerisourceBergen, ticker ABC, that will give Walgreens an ownership stake in AmerisourceBergen. So both stocks having a very good day today. Shares of ABC after early strength. Stock's still up 3.8% to 50.12, but 50.12 is its session low after hitting an intraday high of 52.15. Also in earnings, I think it's been a tough day for DSW. Yes, indeed. A gap down for the stock, down 6.1% today to 62.94. This is the off-price shoe retailer. Nice bottom line growth, up 35% to 69 cents a share. 3 cents below views, though. Sales up 16% to $594.3 million. Good top line growth, but also a little bit below expectations. You know, a lot of these retailers complaining about weather. Weather is a legitimate issue now. Not only Superstorm Sandy, that is well documented. That shaved a lot of revenue off of many retailers' earnings reports, but the Northeast continues to get hit with bad weather, and of course DSW is talking about this, and so this their results going forward could be hit by weather as well. Another earnings report today. WAC, Walter Investment Management. Look at the move in this stock today. I mean, the price move at some stocks today is just hard to fathom. It's a high of 44.50, a low of 31.76. It is now trading at 33.07, down 20.5% on the day. This is a mortgage service provider. You've got some other players in the space, Ocwen Financial, NationStar Mortgage Holdings. All of a sudden, the sentiment around this group, very, very poor. Walter Investment Management, they reported profit excluding items of 64 cents a share. That was 3 cents below the consensus estimate, up 14% from a year ago. Sales up 13% to $176.4 million, nicely above expectations, but big sellers in the stock today, no question about it. Ocwen Financial, OCN, not surprisingly, riding WAC's coattails lower. Ocwen Financial looking very, very weak here, down 6.8% to 36.14, and NationStar Mortgage Holdings have been trying to hang in there, finally gave up its 50-day moving average with conviction, down 6.3% today to 35. Looking at growth stocks as a whole out here, you're starting to see a lot of stocks break below their 50-day moving average. You've got the financials that are still holding up okay. Why don't we just take a look at the XLF here? You see a chart here. Financials under pressure today, but the XLF only down about 0.7% to 18.15, still holding comfortably above its 50-day moving average. And your home builders as well, still two pockets of leadership in the market, financials and the home builders. Of course, home builders today, more good news. Housing starts, building permits came in better than expected for February. Starts came in at 917,000, up slightly from a upwardly revised 910,000 in January. Permits came in much better than expected at 946,000, up from a downwardly revised 904,000 in January. So you can see the ITB here, iShares U.S. Home Construction ETF is outperforming today, up 0.4% to 23.99. So the news, by and large, continues to be pretty good around the financial and the home builders, but technology, boy, there's some selling in technology that is cause for some concern. And again, Nasdaq is on pace for another higher volume decline today. Got to pay attention to that. The theme that we've been talking about in recent days is, yeah, the market market's still in an uptrend. The uptrend is starting to show signs of wear and tear. But on top of that, what is out there to buy? Do you want to chase the financials up here? I mean, you're going to look at a name like a BlackRock, BLK. You can see a stock that was, $190 stock back in December. It's now $252. So it's a lot of the financials have made huge price moves. So you want to be careful not to chase. And if you don't chase, well, what is left out there to buy? If you're not chasing, you run the risk of buying something that has been lagging the market, and that is another way to underperform the market by buying lagging stocks. So at this point, just be patient. A lot of people out there looking for a pullback, leading many to believe that pullback is not going to happen. If the pullback doesn't happen, you're just going to get extended stocks that are going to get more and more and more extended, which is just going to make it even more difficult to put money to work out here. So very simple, just follow the standard rule that if the market is not, during uptrends, sometimes the market's very clear about what to buy. For example, back on January 2nd when the NASDAQ gapped up in price, on that day there were a lot of stocks gapping up. I mean, they were breaking out of bases. They were breaking out of consolidation areas. That's where the market tends to serve up stocks on a silver platter. You can't say right now that the market is serving up stocks on a silver platter. That is for sure. Coming up after the close today, we do have earnings from Adobe Systems, ADBE, another tech name, large cap tech name that is holding in there okay, but has been under pressure for 3 sessions in a row now, down 1% today to 40.66. It's been holding gains nicely and holding above its 50-day moving average. Don't expect a quarter of growth from Adobe. Earnings are expected to be down 46% from a year ago to 31 cents a share. Sales down 6% to $986 million. Again, when you're looking for stocks to buy, it's much better to focus on stocks that are showing consistent growth in recent quarters. You want to look for minimum earnings to sales growth of 25, 30%, if not more, and look for stocks that are under accumulation by mutual funds and other big investors. So Adobe, despite a strong chart, fundamentals come up way short for my taste. We're also going to hear after the close from Francesca's, FRAN. This is actually a very well-run retailer, good growth prospects here, but it's the opposite of Adobe, because what you have here is a weak chart and strong fundamentals. With Adobe, you've got a good chart, weak fundamentals. Francesca's the other way around. So you've got a stock that's under some duress here, down 3.4% to 26.51 ahead of earnings. Look for profit to be up 50% from a year ago to 30 cents a share, with sales up 38% to 84.9 million. Francesca's operates little women's boutique stores around the country. And then also in the retail sector, we're going to hear from Williams Sonoma after the close. WSM, kind of a pricey store, home buy stuff for the kitchen and such at Williams Sonoma. High price, high ticket items here. Another stock that's looking vulnerable, to say the least, ahead of earnings. Some sellers in the stock today. Actually, have been sellers in the stock in 4 out of the past 5 trading sessions. It is down 1.25% today to 44.98. Earnings and sales both expected to be up 10% from a year ago. Earnings of $1.29, sales of $1.4 billion. Let's see. Mentioned the better than expecting housing start and building permit data earlier today. On Wednesday, we're also going to hear from Lennar in the home building space. Let's take a look at Lennar, and again, just kind of not great price action today ahead of earnings tomorrow. Lennar right now down 26 cents, 0.6% to 41.32. Still trying to hold on to its 50-day moving average. Has been able to do it so far. A big quarter of growth is expected at Lennar. We've seen that a lot from many home building reports in recent weeks. Earnings at Lennar expected to be up 100% from a year ago to 16 cents a share. Sales up 24% to $898 million. Now, KB Home also reports later this week. KBH. This is, has been a great performer in the market. In fact, it's actually been hitting highs here, up 2.9% today to 21.02. The irony is they're expected to lose 22 cents a share in their earnings report on Thursday, but good top line growth, sales up 41% to $359.8 million. So Lennar and KB Home set to report later this week. On Wednesday, we're going to have the Fed meeting is going to come to an end. We'll get a decision on interest rates. And on Thursday, weekly jobless claims. Let's see, they're expected to be up 13,000 to 345,000. Existing home sales data on Thursday, they're expected to be up 1.6% to 5 million units. And the latest reading from the Philly Fed for March, expected to come in at -3 from a very poor -12.5 in February. So that is it in terms of earnings reports and economic data for this week. Let's take a look at another name that's been hanging in there pretty well. Shares of IMAX headed into today, up for 4 straight sessions, down 56 cents today, 2.1% to 26.24. This is a stock that is continuing to hold in there pretty well. I think I've got a weekly chart here for IMAX. And if you've never been inside an IMAX theater, it is really something, a great theater experience. You can see a big long base that's been forming here for about 14 months or so. If this market can, if we do get a pullback and that pullback is short-lived, this is a stock that could continue to work here because it's just on the cusp here of trying to break out from a big long base. Fundamentals pretty solid at IMAX, so definitely one to keep an eye on here because of its still acting well. A lot of other stocks in the early stages of possibly breaking down here. IMAX does not look to be in that case. A lot of negative comments coming out of China. Some analysts coming out and saying, be careful here. The economy may not be as healthy as it might look. But Mindray Medical is a China-based medical device maker, having a good day today. Good volume in the stock. Looks like it's under some accumulation here. Mindray Medical up 35 cents, 0.9% to 38.72. We've mentioned this name off and on in the past. It's on the speculative side, but it does have bullish fundamentals and technicals, which means it's worth paying attention to. In its latest quarter, their sales were up 20% from a year ago to $316 million. Earnings up 16%. They operate in 3 segments. They have patient monitoring and life support products, in vitro diagnostic products, and also medical imaging systems. So one of the few charts out there that is not under duress and is looking pretty good here. And again, you look at these volume bars down at the bottom, you see a stock that is under some accumulation here. So looking pretty good here. Other stocks that have the potential to lead, I think we mentioned some of these yesterday. Cree still trading tightly here. We had Keir McDonough on last week. He mentioned Cree as a stock that he's watching. LED technology, these light bulbs that just last forever, right in Cree's sweet spot. Annual earnings this year, 30% next year. Good growth prospects ahead. So Cree looking good here. Good one for the watch list. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, the dip buyers trying to make a go of it here as we head into the close here. Look at the Dow Jones Industrials actually turned positive, up a little more than 5 points to 14,457. NASDAQ Composite still in negative territory, but it has recovered a little bit. It is still in the bottom half of its range, but only down about 10 points now, 0.3% to 3227. And the S&P 500. Let's take a look at the S&P 500. And let's see here. There it is, S&P 500. We'll see that it's right in the middle of its trading range today, down close to 4 points. Only down about 0.2% now to 1548. There was news that came out not too long ago that the parliament in Cyprus rejected today a controversial plan to impose a tax on bank deposits that would qualify the the country for a sovereign bailout. So the market took that as good news, and so we'll see. It remains to be seen if we're going to get a distribution day for the major averages. We use distribution days to kind of keep an eye on or to monitor underlying market health. The market uptrend is still upward until proven otherwise. If we continue to see higher volume declines make their presence felt in the major averages, if we see strong opens followed up by weak closes, if we start to see market breadth deteriorate, we start to see leading growth stocks that have been leading the market since November, December, January. If we start to see them continue to break through support levels, all of these would paint a picture of a market where the risk outweighs the reward for being long. You want to always swim with the market tide as much as possible. A couple of growth names are looking vulnerable here, where I think the risk for more downside outweighs the potential for gains from here. Here's a look at MasterCard, down $3.34 today, 0.7%, declined to $5.1167, broke below its 50-day moving average in heavy volume last Friday, finished near its low again yesterday, and down again today. MasterCard under some selling pressure, and also Panera Bread, PNRA. This has been another big mover in the restaurant group, but a stock that has been lagging the market conspicuously for several months now. It is right now trading up $1.06, 0.7% gain to $161.30. I would call the technical picture of MasterCard and Panera weak at this point. Went over some earnings reports due tomorrow. We're also going to hear from FedEx. I don't think we mentioned FedEx. Transports obviously have been a big pocket of strength, and FedEx, holding above its 50-day moving average. We'll hear from them tomorrow. Earnings down 10% to $1.39 a share. Sales up 3% to $10.85 billion. Also on Wednesday, we'll hear from Oracle, ORCL, another large cap tech name. Under pressure today, down 1% to $35.69, still holding above support here. Look for a profit at Oracle to be up 7% to 66 cents a share. Sales up 4% to $9.4 billion. And finally, Toomey. Toomey came public not that long ago. They make kind of upscale or pricey luggage, I should say. But Toomey is going to be reporting earnings this week as well. And fundamentals pretty solid here. And technically still holding above its 50-day moving average. I see a lot worse charts out there than Toomey. We could see good numbers from the luggage maker. So look for earnings from Toomey on Wednesday as well. Coming up next, the Tom O'Brien Show. See you back here tomorrow, folks, 3 o'clock Eastern for another edition of Breakout Investing. Have a great day.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.